to questions. Please use the Q&A function at the bottom of your screen rather than the chat function. We'll likely leave the questions to the end, but as I said at the outset, this is a journey we're on and we're looking for engagement, so appreciate questions and we'll do our best to answer them. At this point, I'll hand over to our first speaker, who is Blair Keenan. Welcome, Blair.
Kia ora koutou. Thank you, Michael. I just want to preface what we're going to talk about today, I suppose, by having a little bit of a rewind and remembering where we were before this whole thing kicked off, which seems like a very long time ago. But if we think about what was the economic picture like 6 months ago, we had a cyclically slowing economy, which wasn't great, but you know, those cycles happen. But there were a bunch of other things as well. Productivity growth, which is, you know, in the end, the key driver of economic activity over the long term, was in the doldrums, and it had been not just for years, but for decades. And this isn't a Waikato problem, it's something throughout New Zealand. We also have entrenched social issues that we were dealing with. We had worsening environmental problems that we were dealing with. So bad as things are now, you know, we've come from a place where there was still a lot of work to do. So there's even more to do now. A couple of bright points, I suppose, were before we got into the situation, the government, thanks to successive administrations, was in a really strong financial position. Its balance sheet was really strong, and that's enabled it to do the things that it's doing at the moment. And the second one was the banking system was very sound. So we weren't in immediate risk anyway of having some financial crisis, you know, like we did in 2008. So when we think about where we want to get back to, we probably should bear in mind that you know, that wasn't the promised land itself. There was still work to do, and although it was probably a lot better than where we are now, I think we're probably you know, collectively smart enough to try and navigate our way back to somewhere that's even better than where we started from, but it won't necessarily be a short course. So with that preface, I'll hand over to Sarah to start running through some of the stuff that we've been pulling together to try and get our heads around what's happening.
Thanks, Blair, and thanks, Michael. So yeah, I'll start by talking about some of the spending that's going on in the economy, and look at jobs and unemployment and some district stuff and sector stuff within those. So one common way we look at measuring the economy is through GDP, which you'd all be familiar with. And there's different ways we can measure this, but if we look at the expenditure way of measuring it, then we add up all the things that get purchased in the economy. So we've got private consumption, investment, government spending, and net exports. So the private consumption part of it, when we're all out there spending money, that's usually the largest part of the economy. The investment, when we talk about investment, we're talking about businesses investing in things like equipment. The government spending is when they spend on things that are final goods and services, and the net exports, exports minus imports. I'm leaving that to Blair to talk a bit about later. But what we've seen with the, you know, private consumption going down in these times like this, when people have been not spending as much, is the government announcing lots of areas of spending where they're increasing their spending, which helps to counter some of that fall in the private consumption. So I'll start off by looking at the paymark data, which was the electronic card transaction data. So just for some kind of scale of what spending we're talking about, and this is weekly spending so the last data we've got there is for the 31st of May, the week then. $80 million or so spent in the Waikato region. The Hamilton City is 34 million of this, so about 2/5 of it, and we get about another third from adding up Taupo, Waipa, and Thames Coromandel. So at the is about 1% of that spending. So there's big variances between the districts, obviously. The blue line, which is this year's spending, is sitting higher than last year's spending. So in the last week of May, in the Waikato, we've had 106% of the spending we had in the same week last year. Nationally, it's sitting just a bit above 100%. So we're spending a bit more than the rest of New Zealand is. So it's come back really strongly, and I mean that's a good thing. What we don't know yet is, does that mean things are really great, or does that mean we've had a bit of a rebound? People are catching up with their spending that they didn't spend during lockdown. I know for me personally, I've been doing some of that rebound spending. So the shining star throughout this whole time of the big dip in spending has been the food and liquor sector, with positive figures above last year's figures right throughout the whole lockdown, all the different levels we had. And the most outstanding one, as far as meteoric rise, going from zero right through lockdown, now skyrocketing, is the home and recreational retailing sector. So in this last week of May, us Waikato folks spent nearly 1.5 times what we did in that week in May last year. So sitting around at home, looking at all those jobs that needed to be done while we were in lockdown, meant that we all went out to Bunnings or whatever other homeware stores and are now spending up large in those areas. So I'll just get you to change the slide, please, Michael. We'll look at how this looks at a district level. So this slide shows us the percentage change relative to last week. So whereas the last one was absolute numbers. As a region, we're sitting above last year, but nearly every district is sitting above last year's figures. The one at the highest one there, the brown line over the last few weeks, that's Thames Coromandel. You may have lost the key off the side if you've got the same people covering up that I have, but so Thames Coromandel sitting up a lot higher than last year's spending. They're up, their spending in the last few in May has been above what it was in February, March last year, or the same as February, March this year. So while that total spending over the last couple of weeks is looking great, the big elephant in the room that could fall into that sit in that pit there is the fact that for all those weeks people weren't spending much money, and we had a month of region-wide 50 to 60% decrease in spending. So all that spending, that's another person's income, so how much of that is going to be recouped by a bounce back. If you look at it cumulatively over that period from February to May, the spending in New Zealand has been down 18%, and regionally it's pretty similar to that. Some aren't so bad as that. In Thames Coromandel, the spending's only down 11%, and others, we're looking at more like 20-21%. So some of the data that came out from Xero shows us that New Zealand small businesses on average dropped 34% in revenue compared to a year ago. Hopefully the May figures will be a bit brighter as people have gone out and spent more money, so I look forward to those figures. And obviously there's a lot of differences in those sectors. So for those of us that got into lockdown fitness, the sports shoe store that I went into said they'd had their best month, their best May. Bike mechanic at the bike shop said they'd had their best month ever. So in some sectors, they've had these fantastic results, and there's some terrible stories about other retailers that just haven't had that at all and won't be able to survive from that. So, and we've seen announcements of big closures from big stores. The Warehouse has announced some, and Bunnings, 3 of the Bunnings stores in the Waikato region are closing. So if we just change the slides, I'll move on to the labour market. So we started tracking jobs being advertised on TradeMe at a district level, because jobs are a good indicator of the general labour market, and it's an indicator of people's confidence in their business. So we started this kind of just into lockdown when we started to talk about putting this radar out. We don't have the historical data for that, but we've now got a couple of months worth. And after it kind of jiggling along for a bit, since the middle of May, where we went into level 2, we're starting to see that uptick there in those. So some positive signs there. And it's more apparent in some districts than others. Looking particularly good on an increase there is Taupo and Waikato district and Matapiako. So on the next slide, we'll look at job seeker numbers. And so we've also been looking at how many people are getting job seeker support. Obviously not everyone is able to qualify for this, but it's a really good indicator of unemployment. And so this latest data from MSD took us up to the 29th of May, and Waikato was sitting at 7.2% of the working age population is on the job seeker support benefits. So the year, which is on par with what's happening in New Zealand. Although our level is higher, the New Zealand level is 6.3% overall. We're sitting higher than that as we started off sitting higher as well. On the next slide, it just shows the absolute numbers that are receiving job seeker support. This takes us to the week before, so we've had about 4,300 increase. So it'll be more again as we get the next week's data put on there. Then on the next slide, we'll look at how that looks as far as districts and timeframes. So unsurprisingly, more has happened in April than the previous months. We had a bit of an increase in March, but mostly that all happened in April. And then, we look forward to being able to have the May data in there. Also, unsurprisingly, the hardest hit areas, and actually, were tourism districts. So Taupo and Thames Coromandel are the hardest hit there. Waipa is the only other one that was above the New Zealand level in April. When you're talking about the increase since March. So that Thames Coromandel one, which is the dark blue one there, that was a 68% increase in the number of people receiving job seeker support compared to the March numbers. So big increase there. On the next slide, rather than looking at the unemployment side, we can look at the change in the number of filled jobs in New Zealand. Once again, unsurprisingly, there's that big drop that goes down in April. That's the slide on the right is showing the change month by month, and that's seasonally adjusted. The one on the right, which is called regionally in April, that's the percentage change just for the month of April, and it's not seasonally adjusted. So the Waikato one there, you'll see, you're not seeing the same massive decreases that you saw in some of the districts that aren't as diversified. And so particularly tourism and forestry industries were those first ones to see effects. That's where you can see those effects there. So unemployment will continue to be felt. The wage subsidy, I think the first wage subsidy scheme ends today. The loan schemes, they will serve to delay some of the redundancies that would happen. Hopefully they'll they've served to stop a lot of them, but there will be some that will just delay. In other industries, depending on the makeup of the industry, you get a delay because of what they are. Like the construction industry, things were in progress before lockdown. Once they were allowed back at work physically, they were able to just continue on with their construction. What we'll see later is the effects of that. So if we go to the next slide, we can look at building consents. And because building activity in the construction sector, so it shows us how healthy the construction sector is, but it also shows us a bit about what's going to happen with regional growth. So you'll see the numbers there. The red dashed line is the Waikato numbers, and so with the number of consents month on month has been going down since about the last quarter of last year, but certainly took a sharp downturn for April. So we were down 6.9% compared to March. New Zealand, not quite as steep, didn't have the steep fall that the Waikato did. And so for my final slide, I'm going to finish with an appalling slide, which I apologise that I cut and pasted from stuff, and they cut and pasted it badly from somewhere else. So missing numbers and all that kind of thing, but I thought it was interesting all the same. This is Hamilton City. Their actual dwellings consented over a longer period of time and what their projections are. So you can see this massive decrease in what they're expecting to do for dwelling consents over the next year. So I'll finish up there and pass over to Blair to talk you through some of the financial indicators. Thanks.
Thanks, Sarah. I'm going to talk a little bit about some of the not so much Waikato region indicators, but are indicators that will affect pretty much everyone in the Waikato. And Sarah talked a little bit about some of the support schemes that the government's got in place. That's, collectively, those are the fiscal policy responses. And the other main tool that we've got in our recession fighting toolkit is monetary policy, which is mainly managed by the Reserve Bank. Their primary tool is setting the official cash rate, which you can see here in this chart is the blue line. So it doesn't change very often. It's not bouncing around because it's a set rate. It's not driven by the market. And you can see there, just sort of on the bottom right-hand side, hopefully, that back in March, the Reserve Bank cut the official cash rate from 1% to 0.25. And they've also engaged in a bond buying program, with the idea being that that's going to help keep some of those longer term interest rates low. And that worked a bit for a start at least, but I think it's noteworthy that the green line on the screen there has started to trend upwards in the last few weeks, which is a little bit odd. So just flick on to the next slide, Michael. Okay, this is a different way of showing the same thing. The blue line is it's what we call a yield curve. It just shows what the interest rates are for each of the different maturities. And as you can see, on the left-hand side, it's pretty fixed. It's not moving around very much, and it's a lot lower than it was 3 months ago, which is the red line. But on the right, things have started to tick up. Those are those bond yields starting to rise. So we're quite a bit higher than we were 2 weeks ago, and as of the end of last week, I think that the 10-year yields were even higher than we were 3 months ago, which is a little bit of an odd sort of thing to see when, you know, we're in the face of the worst recession possibly we've ever seen, that we're seeing some of those longer term interest rates rise. Jump on to next slide. So you can't see it very well because it's right on the right hand side, but we have seen retail rates tick down as a result of the easing of monetary policy. But you look at what happened way back when in 2008-9, and the fall in interest rates was much bigger than what we're seeing now, or we're not seeing, as the case may be. But if you look up our radar, this chart should appear on there for you as well. And I guess the question is, the Reserve Bank has said, well, we've cut rates to 0.25%. You know, zero is as low as you can go. And maybe that's right. But the Bank of Japan, the Bank of Sweden, the Bank of Switzerland, the European Central Bank, all have set negative interest rates, some of them for you know, as much as 5 years. And so I think there is a good argument that the Reserve Bank should be looking at whether it should be setting negative interest rates. And the bond buying program that it's engaged in doesn't seem to be working as well as it should. So next slide, Michael. Okay, so the New Zealand dollar exchange rate is I guess it's the other main indicator of monetary policy. And we've seen that as we went in through January, February, and into March, fell quite strongly. But it's ticked up since the last couple of weeks, I think it is. Michael, I'm just wondering whether you can move the faces on the screen so that they're up the top or anything.
Yeah, so the attendees can drag the faces anywhere on the screen they like, or they can minimise that face functionality just by using their mouse and hovering over the right buttons at the top of the faces.
Okay, good. So hopefully you'll be able to see then that you know, there's been quite a tick up in the exchange rate, and in fact we're now sitting pretty much where we were on average in 2019. So next slide, Michael. So this one looks at a couple of the previous one was a trade weighted index. So it's like a general indicator of the New Zealand dollar exchange rate. This one's showing against probably the most important trading partners that we've got. And you can see that the same overall pattern features both in the Chinese and the US dollar exchange rates. So there was that fall through March and the more recent tick up. The Australian dollar, I guess, is the one where we see it continuing to sort of remain a little bit soft, and that's probably a reflection of, you know, if you remember these exchange rates are reflecting relative prices, and it's probably a reflection of Australia doing fairly well as well. So the demand for Australian dollars is still good. Next slide. So I guess where the rubber meets the road, and as far as the exchange rate goes, is with exports. So high exchange rate makes it much harder to compete on in export markets. But we've actually seen exports holding up really quite well throughout the crisis period, and the green line is the 2020 figures. It's a rolling total over 2 weeks. And you can see back in both February and in March, there were some really strong periods where exports were much stronger than last year or the year before. And in fact, even though it's come off a little bit in recent weeks, exports are still doing pretty well. These are merchandise exports, so it's physical goods. I think also it's worth noting that 2018 and 2019 were pretty good years for exports in recent histories. If we had included 2015, 16, 17 on there, they would be all well below any of the lines that we're seeing. So it's things seem to be holding up quite nicely. Next slide. And if we have a look at which markets we're depending on, those ones at the top there are a good indication of how dependent we've become on Asian markets, China particularly, but the rest of East Asia as well. So that'll be Korea, Japan, Indonesia, those Southeast Asian nations, all of which have been holding up nicely. Same goes to a lesser extent for USA and the European Union. And again, Australia looks like they're doing pretty well for us. So our exports there are good. Next slide. Now, from the Waikato's perspective, although we're not quite as dependent on the ag sector as there's a common perception out there that we're just a big dairy farm. The Waikato economy is certainly a lot more than that. But as far as export goes, the biggest ones by quite a stretch are dairy and meat products. Both of those, again, have been holding up really well. Forestry, on the other hand, it was one of the early hits that was taken by the crisis, and it's in the last few weeks things have improved a little bit. I think that's mostly volume driven. Prices haven't necessarily been that great, and I guess the meat one is also one that there's a bit of a decline showing there, and we're going to be comparing it with 2019, which was a really strong year. One of the reasons why our meat products were selling so well was the emergence of a big market in China, but part of that was driven by an outbreak and a widespread outbreak of African swine fever in China, which led to them slaughtering, I think it was something like a quarter or a third of their entire pig herd. So they suddenly had this big gap in meat products that they needed to fill, and luckily we were there to step in with our exports. I'm not necessarily as confident that that's going to remain the case. Now, the other thing that's going on for these pastoral exports as well, it's with all the news about pandemics and everything else, we seem to have almost forgotten that there's a lot of people out there dealing with a drought, and that's led to a lot of dairy farms drying off a bit earlier, and also there was quite a bit of destocking that went on over the summer. So it remains to be seen how that unwinds over time. Next slide, Michael. And one of the things I think as well that I'm cautious about when I look at our agricultural food exports in particular, I've heard quite a few times that the world needs to eat, and so there will always still be demand for our food products. And I think that's true up to a point. The concern that I have, I guess, is that we don't necessarily have the power to set the prices on those world markets. In fact, we certainly don't. And whilst people may still want our exports, our food products, they won't necessarily be willing or able to pay the prices that we want for our producers. And so this chart just, I guess, serves as a bit of a reminder of that. Food prices in New Zealand are tracking up, and I think there's probably a little bit of supply chain disruption being reflected in some of those figures, and also the drought. But when we look at the green line there, the last couple of months, world food prices have been falling quite sharply. And I think that's what I fear that might be a reflection of is some deflationary pressure around the world. We're seeing lots of economies shrinking, and the risk is that as deflation sets in, we start to see that become a self-reinforcing spiral. Next slide, Michael. Okay, and because Sarah finished with a blurry cut and paste, I've finished with a blurry cut and paste as well. This one is to give us a sense. We've been focusing on exports of goods, but exports of services are really important for the New Zealand economy as well. And on the left-hand side there, you can see the chart showing travel services, which code for tourism and education and other things. For the last few years has been our biggest export earner. The most recent data shows it just dipping below dairy, but this is year-ended figure, and it doesn't really capture what's happened since then. So I suspect if we came back and looked at this in 6 months' time, hopefully dairy would be continuing along on its track. But the travel services may well have fallen out of bed. Services look like. So the blue line at the top is the total. So the biggest chunk of that you can see is other personal travel services. So you can interpret that as tourism effectively. But education and business travel are both quite significant chunks as well. For the moment, internationally, all of those have effectively gone. And so the size of the hole in the economy that leaves is very large indeed. So that's it for the data that we've got to show today. I think we need to kind of sum up what we've seen so far has been New Zealand in disaster relief mode. The government's been throwing lots of money at it. The Reserve Bank has been, possibly could do more, but has been doing some things. But we have started to see some positive signs, as Sarah mentioned. I think it's too soon to be sure that we have bounced back out of the hole, because what we don't know is whether the effects of all that decrease in spending power of all the newly unemployed or the newly out of business, all of that stuff has flow-on effects over time. It's all someone else's income as well. And also we've got a rest of the world that doesn't seem to be coming to grips with the pandemic quite as well as we are. So that's a risk of depressed demand from the rest of the world, but also the risk of reinfection. It could come back. So there's a lot of uncertainty out there. And on that dismal note, over to you, Michael.
Yeah, thanks, Blair. Data for data's sake's not good for anyone, and I said at the outset that we're quite keen to engage with users of the data to understand what gaps we might have, how we might improve it. We've built this thing on the fly, as a lot of people are doing through sort of the COVID recovery. So quite keen to hear your questions. I've got a couple of questions here, of course. Blair, you partly answered it just in that those last few comments you made, but as Sarah said, the spend is back up and even above in many cases where it was pre-COVID and certainly on last year. So, you know, are we in fact out of the woods? We've survived COVID and it's business as usual.
I think the short answer is no. We're certainly not out of the woods. I'm hopeful that we can see the edge of the forest, if you like. But as I say, there's a lot of the effects that haven't flowed through into the data, even though we're trying to sort of get as up-to-date data as possible. There'll be people hanging on in business now who may not be able to in the long run. They may not be able to hold on to all of their employees. And each time one of those things falls over, whether it's a business or a job, that's going to affect people's spending power. The government's still putting a lot, you know, they've extended their wage subsidy scheme and those sorts of things. So the life support's still going, and it's not clear that if you took that away now, we wouldn't see things collapse again.
Yeah, quite a lot of uncertainty ahead. We've had a couple of questions come through. Nikki Lee's asked if we can have the slides. Absolutely, just send me a message, mbf@tewaka.nz if you like. MBF, it's Michael Bassett-Foss, mbf@tewaka.nz, or all the graphs are on the radar as well. Harvey Brooks, Blair has asked a great question. Can you explain the paradox of the yield curves a little bit more? What does it mean about how people live and how people are seeing over things over the next few years? I'll try and pull up that slide while you start answering it.
Good question, Harvey. One of the reasons why I put the slide in here is because the yield curve usually gives you a sense of confidence in the economy. So if people are happy to invest in the long term, you see an upward sloping yield curve. When you've got a downward sloping yield curve, it's generally seen as a pretty good indicator of a recession on its way. And when you look at this, you can see, well, that's that. You know, at least at the longer end of the curve, it's upward sloping. Now that's, as I say, it's a bit of a puzzle as to why that's happening. High yields generally mean that on the secondary market, those the bond prices are lower, which means there's not enough demand for them relative to the supply. So that suggests that you know, the way these are increasing, the bond buying program of the Reserve Bank isn't enough to keep them low, and there's not enough other demand for them. Now, it's a question of, is that because people are looking for other assets? Do they not have confidence? You know, bond yields are usually the safest thing that you can find. But maybe there's a view that we've hit the bottom, and other assets might be cheap and somewhere good to put your money in at the moment. Or perhaps everyone's buying gold and bitcoins.
Yeah, right. We'll move quickly on. A couple of questions here about mortgage holidays that we'll just drill into, Blair. Sarah Beeman talked about, is there any bank data on the numbers that have taken mortgage holidays? And what's the impact going to be sort of 6 months down the track? And just related to that, Paul Baines is asked what big events are coming up like mortgage holidays. What's going to happen at the end of those? Any thoughts, Blair?
I guess in economics, as in anything else, there's never a free lunch. There's always a reckoning at some point. And I think these mortgage holidays are seen as being in that disaster relief package of things. So the initial focus of policy through this crisis has been, there's been this disaster, people are losing incomes, people can't afford to, pay their mortgages or their rent or buy food. So we need to make sure that people have got either additional income or can maintain their income, and that's through things like wage subsidy, or the immediate pressure that they're facing through these expenses, like their mortgages or whatever it might be, is relieved. I think that there may well have to be some additional package that's wrapped around once those things start to expire. I think, unless we recover a lot more quickly than I think we're going to, there's still going to be people who have taken these mortgage holidays, and once those expire, they're faced with a real problem. And that's kind of one of the things where there'll be periodic waves. When we think we might be through the worst of it, stuff like that will come back and bite us potentially.
Yeah, indeed, Blair, and goodness, there's been a bit of publicity in the last couple of days about the wage subsidies and those companies that have taken it and then laid off staff at the end of the wage subsidy time period. So the easing back into normality is going to take time. Great question from Grant Johnson here around e-commerce activity, and our gut feeling is that it's gone up, and I've certainly seen some data on it. Have you seen any recent data or information, Blair, that you can talk to the e-commerce activity? Grant notes at Rocket Spark, we saw a huge increase in e-commerce activity through the platform, even when taking into account so many businesses that couldn't trade in level 4 lockdown.
I haven't seen great data on that, but I'm hearing it all over the place, including from the Courier Post guy who delivered something to me the other day and said, e-commerce has gone crazy. He's been at work since 3 o'clock this morning, and this was 5 o'clock in the afternoon. He said, there's no end in sight. So there's certainly a lot of that going on. And it will be interesting to see how that has changed as a proportion of that total spend. I imagine it's probably an emerging type of data that I haven't necessarily got a good handle on at the moment. But the other thing is, I've heard a lot of stories about anyone who didn't have an electronic platform for sales and that sort of thing, rushing to do that. So it looks to me like that's not necessarily a short-term trend. It's a real shift in behaviour.
Yeah, sure, Blair. I see Steve Tripp, you've raised your hand. Maybe just throw your comments into the Q&A and share it with people. And if anyone else out there's got seen some data that we can use, certainly welcome that. There's another question here we'll get on to as well. What are the trends in spending on imported goods, new versus used cars?
I haven't looked at that specifically. I know imports generally are down quite a bit, and that's been a reflection of, it's reflected those spending patterns that Sarah showed earlier. I did see some data a few weeks ago on car registrations, and they looked like they were following a similar sort of pattern. Yeah, I haven't. It would be a useful one to look at, actually.
Yeah, indeed. So, Blair, you've spent a bit of time on the radar. In your view, where do you think the gaps are in the radar? What extra data would you like to get your hands on to bring colour to what's going on here in the Waikato? And what's your vision for taking it forward?
What I would really like is if we got into a situation where things weren't quite so fluid and I didn't have to do this every week. But seriously, I mean, I think there are some gaps. Several of them we've already mentioned. There's the e-commerce stuff. There's one thing that I think would be really interesting would be around the Māori economy. I think that would be useful because, one way or another, it's become a very powerful part of the wider Waikato economy, and it's there's potential there to make a huge amount of difference. Another sector that I think we're missing is the not-for-profit sector. So even though we don't see profits and those sorts of things generated, there's a lot of people employed in that sector, and they add a lot of value that's not counted in things like GDP. So it would be good to get a better handle on what that looks like and how important it is to support the other parts of the economy.
Yeah, nice. Yeah, Grant, be great to see your e-commerce data. Thanks, appreciate you sending something through. Harvey, I think the radar's brilliant, excellent. I like the sound of that. Use it all the time when providing context on Waikato and its current shape. Excellent lead, great timely data. Might get to the point where it doesn't need to be weekly. Yeah, we are reflecting at the moment about the time that goes into doing this. It'd be nice to automate a lot of the functions, but the functionality is not there at the moment. We might push it out to monthly. That's just a gut feel from me. So we'll assess it over the coming weeks as things unfold. But if anyone's got a view on that, send through those views. Steve Dritt asked when the shovel-ready projects are going to be announced. No, I don't know, Steve. We had a couple of PGF announcements yesterday in the region, which is great news, but those projects were obviously in train a long time before COVID. What we're finding with the Crown Infrastructure Partners process is that, they've obviously shortlisted the projects, but not all of them are going to go through. So what that's doing, it's actually creating uncertainty for councils and the private sector that have got projects on the shortlist. They don't know whether to wait for the government funding or crack on and do them. And meanwhile, construction companies are starting to lay off staff. So our view is that we need to get to a yes/no very quickly, so that just gives certainty back out to the market and to those people driving projects. Right, I think we'll, looks like the questions are starting to wind up a bit, but probably just last comment from me, and as I said at the outset, we're on a journey with this. We're building it on the fly. We're adding other bits of data to it, and really are keen to pick up the engagement on the radar. I'd love to hear how people are using it. Send me notes and messages on that. If you think there's gaps, let us know. If it's not going to be too time consuming and difficult, we'd love to add that data to it. So, and as we look forward, we'll turn our minds towards, okay, again, it's just data and information. What are the insights that we can actually layer across this, and how can we be talking those and sharing them? The, an interesting thought, number of discussions we've had is that the data sort of provides a sort of a series of information for us, or a lot of information, but what people are actually seeing on the ground in their communities and with their business actually validates the data or provides the real insights that can be layered across sharing of the stories. So that's nirvana. That's where we'd like to get to, and actually to provide the local feedback into the data, as well as sort of using the data as the overall framing up of the conversation. So kia ora tātou, everyone. Appreciate you tuning in, and let's keep this discussion going. Blair, Sarah's, we've lost already. Thank you both for your time and effort, and helping us, and partnering with us to bring this to Te Waikato. Have a great rest of the day, everybody, and keep up the fantastic mahi. Bye for now.
Good.